And I didn't know how to do books. I didn't know how to handle my books. Like, I found someone to help with the books and teach me so I could just get through the first few months until I could afford to hire some help there.
Welcome to the Freedom Real Estate Podcast with your boy, Andrew and Artem. And I am excited and ecstatic to have David Melzer today. This guy's a public adjuster. He's going to give us the ins and outs when it comes to insurance. But not only that, this guy is went on to build a multi-million-dollar business all by himself through masterminds, through the entrepreneurial mindset. So really excited to hear his journey. How you doing today, Dave?
Good. Fantastic. Happy Monday. Hope you
Happy
guys,
Monday.
Didn't get after it too much for the Super Bowl game over the weekend.
Yes, don't bring up bad memories, my friend. You know, we are in New England. We are in Boston, all right? You're sticking the freaking screwdriver in the moon right now.
So all the way from sunny San Diego to our covered in snow Worcester.
Mm-hmm.
Here we go.
Yeah. So, Dave, let's first start with, like, how did you get into the insurance world in general? Like, what's your expertise, and kind of what shifted you to kind of doing this on your own?
I mean, I started working for the insurance companies right out of college. Probably like my first real job out of college was an insurance adjuster in the auto space. But I liked it because I never really have worked at a desk. I mean, other than the desk that I'm working at right now. I've always been more field-ridden kind of jobs, and started out there in 2011 or so. And worked in the insurance company, worked for various different insurance companies until about 2020 when I went out and started my own thing.
So, Dave, it's funny because, you know, you talk about being a public adjuster for car crashes, car companies, more or less, right? That reminds me of, like, in Fight Club, was it the main character? Like, wasn't he like a claim adjuster for auto accidents? And, like, didn't he like go on to create a whole like hidden world?
He was an actuary, so a bit different.
Okay.
So he was the one that took the numbers against different but similar. But no, so he was I think they're called actuaries, but they're literally the guys who say, oh, Ford has a recall on this ignition starter. We assume it's going to cause 10 deaths, and we're going to pay out $20 million over the next 10 years on this. So is it more expensive or cheaper for us to do the recall or just pay out the lawsuits? That's what his thing was.
Okay, so he's more or less just a walking calculator, run probability calculations to figure out what's more cost efficient, right?
Yeah.
But you're a public adjuster, so like, what do you do?
So I don't really work in the auto space. I used to work in the auto space when I was at the insurance companies, but now mostly in the property, investor side, consumer side. So we represent homeowners, business owners, apartment owners, investors, whatever it is, when it comes to physical damages to homes and properties. So could be a flood to a single family home. It could be a fire to a multifamily, whatever it is. And so we're really here as an advocate for you. I mean, if you've handled insurance claims, you know that the insurance company always brings their barrage of advocates on their side of things. And so
Sure.
Why shouldn't you have the same advocacy on your side of things?
So more or less, the ins and outs of insurance policies. So when something big comes across my desk, some big issue, you know how to get the maximum amount of money to get reimbursed for that issue, right? Is that kind of how? And as a result, you get a piece of the pie. Is that kind of how it works?
Yeah. So when I do kind of like rough calculations to see what our increases is. So for instance, last year, our average increase on claims was like almost 700%. So whatever the insurance company originally gave, I took a random pool of some claims that we had, and we increased those claims on average 700%.
Wow. And what do you ask to help with this? To be an advocate, to be an expert on the insurance side?
It kind of ranges. We handle a wide variety of claims, from multi-million-dollar claims to six-figure claims, kind of thing. So when it comes to like some of the larger claims, we're usually 10%. So it's like when people are approaching me like, well, why should I hire you? I'm like, well, I would put 10% of my earnings to get 700% any day, all day. You're never going to find those kind of returns anywhere else. So unless Bitcoin's on a real heater, but you're just really not going to find that. And it's kind of tried and true. I mean, the day in and day out, I'll walk into a property with an insurance company and we'll have just been assigned to the claim. And right then and there, we already moved the needle with the scope of work by 50, 60%, just and a means of us being there for that first inspection. And that not really doesn't account for the back and forth that happens over the period of the next few months or sometimes even years for some of these larger claims and how long they drag out.
Interesting.
Now, silly question, or I should say maybe new question. Do homeowners call you when something is wrong or before something's wrong?
Ideally, when they find the earlier, the better. So we don't kind of do like preemptive inspections because it's honestly just tough because you don't really know what's going to go wrong. But traditionally, the best bet for us to get involved is right away. So their call is to maybe to like an emergency mitigation company if there's a flood or fire to just at least mitigate the damages in the meantime, board up the house, suck up the water, whatever it is. And then ideally the next phone call is to us. Because when people report the claims, sometimes if they say the wrong things, it can already trigger coverage issues with the insurance company.
So we really have to have you on speed dial for when emergencies strike.
Yeah.
So what really attracted me to you, Dave, is you're not only an insurance public adjuster, right? But you're also an entrepreneur. And you started your journey as a W-2 employee. Then didn't you find real estate and that kind of opened your eyes to entrepreneurship? And then you eventually started this public adjuster company, right?
Yeah, exactly.
And shed some light on that.
Yeah, absolutely. So come like 2016, 2017, I was just kind of in the lulls of working as a W-2. And I realized like, no one's going to come and save me. This is my career path. If I don't do something to change it, then this is what I'm going to be bound and determined to. And so actually, I emailed you a photo. I bought a multifamily back in like late 17 or so, and it was just the bane of my existence. Everything that could have gone wrong went wrong in this property. If you look at that photo, that was when I was at kind of the lowest of the low. I was suited up. So if you imagine a sewage ejection well, so you have a property that sits below the city main. So property's down here in the city main, sewage line is up here. So it drains into a well and then pumps out the sewage to the city main itself.
Okay.
I was waist deep in the sewage well, shoulder deep in the sewage well, trying to connect and fix the sewage ejection pump while I had an extension cord wrapped around my waist, tied to the back of my 72-year-old mother's SUV, just in case I were to pass out, while she's at the top holding a fan to circulate the oxygen down there. And right then I was like, I don't know if this is the right path for me at this point. And so...
that's never happened to me, and I own 500 rental. I don't know, man.
Well, so what it really was is that there was some OSHA compliance issues with this well that most of the plumbers would not go down to. Oh. And at that point, I sort of burned through all my cash to do the repairs, and it would have been like probably about $100,000 repair. And so we were just trying to kind of like jerry rig it to help get it through.
Respect. I respect that.
Fast forward a few months, and it actually had a substantial flood at the property. Not a completely separate issue, not my doing of trying to fix the system. But the insurance company came out and they gave me like $6,500 or something like that.
Yeah.
And I ended up settling the claim out at like $185,000. And I was like, oh, if I can do this for myself, like why shouldn't other people have access to that? And literally put the property on the market like weeks later, which ended up being in which was like early 2020. And so in our industry, getting licensed as a public adjuster is a feat. It's a decent thing to get approved through the state and everything like that, and all the classes and courses you have to take. I submitted in March of 2020, but obviously with the shutdowns from COVID, nobody really got back to me. I wasn't licensed until November. It was like November 1st of 2020. Put my 2 weeks in on the 2nd, and then off to the races on the 17th.
So, no, I find that really interesting because you found entrepreneurship through real estate, but in doing real estate, you realize, first of all, this wasn't for me. But second of all, you found a problem and you solved for that problem and you created a business out of that.
Yeah. And don't get me wrong, like public adjusters have existed. But what I found was that there was a market in Southern California specifically of public adjusters that weren't really available to handle everyday claims. There was a lot of, traditionally in our industry, it's a lot of like ambulance chasers. When fires happen, it's public information. So it's all recorded on various sites and things like that. So people show up and kind of cold call or hard solicit, knock on doors after big events like that. But what I figured is I'm more of a relationship person. And so I was able to create a lot of relationships in the industry of everyday water loss claims, smaller fires that traditionally didn't get the attention of these large companies. And so I went from, literally starting at ground one with 0 clients and 0 accounts and relationships to that first year, I handled almost 200 claims on my own.
Wow.
And then, then slowly but surely actually not slowly but surely, but very quickly ended up bringing people on. I started November of 2020. My first hire was January of 2021, and then hired someone else in the middle of that year, and then another person that year. And then kind of it's just grown since then.
Did you have much of an outline or a sense of your business? Because it seems like a lot of people usually start their side hustle alongside with their job, then they maybe do it for a year or two, slowly step one foot into that boat before they fully quit. And you just quit and went right at it, and you succeeded almost immediately. That's very rare.
Yeah, because if my existing W-2 would have found out that I was licensed, they would have fired me on the spot. And I knew that. Because I'm literally going from working on the insurance side of things to now fighting against the insurance company. So I went all in 100%. I mean, I had sold that property, so I had a little bit of cash on hand to just get started. Didn't end up paying myself for about 18 months, and went down to almost 0. Granted, like the business account was slowly but surely growing, but I went down to almost like 0 from just investment into the business. And then finally by about 16, 18 months, started paying myself regularly.
Very high risk, high reward.
That's pretty impressive. But, I think you gloss over the fact that there's so much development that is involved with going from a solo entrepreneur to building a multi-million-dollar organization. Like, what tools or strategies helped you have the ability to make that growth to the level you're at today?
I think the first thing was the time audit. So I remember, I was the first 2 years of the business, we were living at a different house in Vista, and I had this small little office in the top corner, and I remember burning the midnight oil daily. I mean, it was 6 or 7 in the morning till 5 p.m. I try to get a little workout in or something, have some quick dinner with my wife, and then it was back to the office until 11 or 12 at night, and like every night for 2 years. And as soon as I joined GoBundance, where you and I originally met, I went to an event where this guy talked about a time audit. I was like, what the hell is a time audit? And he sent me the breakdown. And so what it is you go through your day, your work day, and allocate where your time is by every 15 minutes, 30 minutes, whatever you do. And I found that right out of the gate, I was spending a lot of time on like administrative type work. And so very early on, I realized, okay, I need like administrative help for like sending invoices, collections, organizing some back end paperwork, and just some of the more less customer facing, client facing, less like heavily technical stuff, and more of just stuff that I needed to free up some of my time. So brought that first person, and she's still been with me. She's been with me for 5 years now. And she started with me, like I said, 2 months into it or so. And that was a huge a lift, was being able to remove myself from some of the administrative work that, one, it's not my forte and my best area. And 2, it's just really not where my best time is spent.
So you started with a time audit and you figured out, what gives me energy, what takes energy away from me, what's a low dollar per hour task, what's a high dollar per hour task. And then you hired somebody to take the dead weight off of you, right? That's how you started, right?
That was kind of my first introduction to like, oh, that was wild. And I mean, whenever you hire these people out to replace your role, inevitably you sort of like go down in a bit of profitability, but then you kind of shoot back up. So you realize it's an investment, and it's no different than investing in a property, because it's like, I'm going to put this money into this individual in turn and know that it's going to yield exponentially on the back end.
But it's funny because you came to this realization by surrounding yourself around other entrepreneurs.
Yeah.
Without you being in that room, you'd probably still be a solo entrepreneur today, I would assume.
Yeah, well, it's funny. So my company's called Property Claims Consultant, not Consultants, because I always thought it was just going to be me. So, and someone stole the other URL. But,
oh, that Bob.
So, but yeah, that's how it started. And then it's just been kind of off to the races. We're up to about 10 employees now. And same with anything else, kind of fluctuate up and down. And it's been great. It's been a whirlwind. And then as you know, like all of these highs and lows of being an entrepreneur, you run into everything.
Yeah, but I think you bring up a really cool point with the mindset shift from a growing entrepreneur. You go from a solo entrepreneur, you figure out like what am I good at, what am I not good at. You start delegating that, and then you get more advanced. You start creating org charts. You start using personality tests. So tell me about that. What was your next stage in developing this great organization to what it is today?
Yeah, so the first hire was an administrative help, and then the next one was, well, hey, I can't take on all of this work. So then actually going through a time audit was, what's my next hire? And so I started hiring. I brought on an estimator, so like someone to alleviate myself for some other less dollar productive type jobs, and then brought on another insurance adjuster, and then brought on my folks shortly after to handle some more administrative stuff that I needed help with, and then it just kind of continued to grow. I did not find, we use Culture Index. I did not find that, unfortunately, until about 2 or 3 years in, or actually probably 3 or 4 years in. And I wish I would have earlier, just because, you know, it can be a tool and a great tool if you really lean into it, and Culture Index, DISC, whatever you want to use. But what I've really liked about it is that it helps you kind of peek under the hood a little bit when you have when you're interviewing someone. You really know like what type of person they are. I think you still have to leverage that interview and an experience-based interview, behavioral-based questions, things like that. But it was able to help me start to kind of like build out and architect the organization itself.
Yeah, if people don't know, Cultural Index is a personality test, right? It's a tool to understand if people have the right traits for the right role, right? And it's super powerful because it allows you to construct an organization similar to constructing a building, right? You put brick by brick in an intentional manner, then it creates an actual something that makes sense, right? But if you just get started as an entrepreneur, you just hire your friends or hire whoever you think you have to hire, you end up with a bunch of people not in the right seats and things not operating in the most efficient manner.
Yeah. 100%. And I think me being a more like a social person, outgoing person, I wanted to just hire that social outgoing person, but I realized that you need those people to be kind of in the weeds of like really detail oriented. And so it helps you realize that you can't just hire a bunch of salespeople, because you need people that are going to be in the thick of it doing the more detail oriented tasks or roles or whatever it is. But you need those face cards. So it taught me that, you know, you need a little bit of everybody. Like one Culture Index architect, I don't think is better than the other. It's just it's great to have different ones within your organization. And it was, well, what's crazy is that the first gal I hired was, ironically, that I hired her way before Culture Index. She really was that perfect fit for her role. Like what she does and the amount of detail orientation that is involved in what she does, I mean, she crushes it. I like 0 mistakes over the 5 years that she's been involved with me, and it's just been fantastic. But I didn't know that at the time. It just worked out.
Yeah, I think you bring up a good point. It's like a big blind spot is we hire people who are similar to us because it makes us comfortable, right? But the truth of the matter is, for your organization to be successful, you have to have people that are literally opposite of you because they have other strengths that negate your weaknesses, right? So it's very much a balancing act.
So quick follow-up to that. How often do you actually do cultural indexes or time audits throughout your business now? Is it like something that you do when you hit a brick wall, or is it something you do regularly to make sure that you have checks and balances in place for your business? Prematurely, preferably. On the time audits, I usually do them about once a quarter. I also, if I'm kind of like just not being as productive and I'm realizing my time is being spent elsewhere, I'll do a time audit, or I'll also have my team do it. So I have a lot of the people on my team do it regularly, because then it helps me figure out where the holes are. So that's been very helpful. And I had actually my VP do it just about 2 or 3 weeks ago, as we're trying to look into hiring another sort of back end help. So I do those pretty regularly amongst the team. The other question was Culture Index. So the trick around Culture Index is traditionally the first time that people take it is the most accurate data you get. So I'll still have people retake it, but I have them retake a second portion of it. So I have them retake it about once a quarter or so. And it's a very quick survey. It takes 3 minutes, 5 minutes or so. So we still do that. And my VP has gone through the training. I did train most of my team through it.
And so, but my perspective has kind of changed where I think that the most value is from the more managerial type roles is to get them trained up on it. And so that they're fully versed in what we're looking for.
Got it. Fantastic. So it's better to prevent the maintenance than it is to do it during the crisis.
Yes. Yeah. 100%.
What is the most common thing that people get wrong about starting in entrepreneurship?
Most common mistakes that people make. So I think the big thing is that people from getting started to like pulling the trigger with starting a business or whatever it is, people get so caught up into the minutia of like, oh, well, how do I handle the bookkeeping, or how do I get through the Secretary of State, or how do I file this LLC? And people get so worried about how that happens. And it's like, just do it and you'll figure it out. When I started my first business, I have an S corp. I forgot to file the S corp elections. I ended up paying $500 or $800 2 years later for that mistake. But it's like, it is what it is. So a lot of the conversations I have with people that are kind of on the fence of starting that little side hustle or that business or whatever it is, they're so worried about, well, I don't know how to do this. Why don't you just kind of figure it out? YouTube is there for a reason. And I didn't know how to do books. I didn't know how to handle my books. Like, I found someone to help with the books and teach me so I could just get through the first few months until I could afford to hire some help there. But I think what really delineates between an entrepreneur and a solo entrepreneur is people that just want to get into the thick of it and figure it out.
Skewing towards action.
All right. So what are some of the most common mistakes people make on the user side or on the customer side with insurances and adjustments?
So the biggest issue I see is that people just give up too much information. So when the insurance companies call...
Sorry, to the insurance or to you? Who do they give up the information to?
Too much information to the insurance company. So when I traditionally have calls with people before they filed their claim, my kind of trick is that, hey, it's kind of like you're getting arrested. The less, the better. They're going to have this laundry list of questions. Traditionally, when you call in a claim, it goes to a call center, and it could be in, somewhere Midwest. Like, it's usually a call center in the Midwest, down in the South, like wherever they have them, these major hubs. And these call center people have a template of questions to ask. If you report you had a fire, they're going to ask you 27 other subsequent questions. And sometimes people, because they're so kind of scared, they just give up too much information, and it can shoot them in the foot. There is a lot of exclusions that people don't know about in their policy that can be applicable to certain claims if you don't address it the right way. And so more often than not, people will give up too much information in the early onsets of the claim, and it either partially or fully gets their claim excluded or denied down the road.
Wow.
I love your analogy where it's like you kind of get yourself arrested, because when you get arrested, what's the first thing you do? You say,
you have the right to remain silent.
You say, talk to my attorney. You say, talk to my attorney, right? And that's exactly what you're doing in the scenario is, when you're talking to the quote unquote, the police, right? You got your attorney by your side coaching you through the process.
So I'm curious, is this because you find that most people have a misconception that, oh, I have insurance, I have something go wrong, insurance is on my side, so they're supposed to help me? Or is it that they panic and get scared and they just start, spilling out all the details because they're still a little bit of in shock?
All of the above. They just figure, if I tell this adjuster more, they're going to help me more. They're just a bit in shock. Yeah, a bit in shock, and a bit just, oh, well, like, this insurance company's here to help me. And I don't think that the insurance companies operate in a malicious manner all the time. There are instances that they do, but they're also following policies and procedures that are set forth by a larger bureaucracy that is really set in place to minimize their exposure.
I'm a big believer, intrinsically humans are not evil, right? But when you involve institutions and rules of certain sort of biases and incentives, I think, sort of the wrong intentions can arise, right? And ultimately, with these insurance-led organizations, who is their ultimate overseer? It's the stockholders, right? They have to provide a profit, right? And the only way you're going to provide a profit is pay the least amount of claims possible, right? And to your point, and to Artem's point, most people go into it thinking insurance has their back, but the truth of the matter is they don't. Most of the time, I think, at least. Maybe I'm wrong.
I think a great example from an internal insurance perspective, one of their main KPIs is traditionally a cycle time. And it can be a variety of different ways that they word it. But to an extent, a lot of the insurance adjusters are held and bound to a KPI metric that says, how quickly are you, reaching out to this homeowner, inspecting the property virtually or in person? How quickly are you paying or denying the claim? And how quickly are you closing the claim? What that in turn does is it means, what is the quickest way for someone to resolve their claim? Control the scope of work the best that they can in the means that outfits, that betters the insurance company's perspective, or deny the claim and close it out. So it's like a KPI. People always, ask me, does the insurance company get bonus for underpaying my claim? Not directly, but it's this indirect way that the bureaucracies are set up.
And this goes back to Andrew's point, which is inherently humans aren't evil, but if their entire checklist or scope of work is, okay, I have to either do this much evil to this person or that much evil to this person, all of their options are kind of, you're not going to get that much money for your burnt down house. I'm sorry.
Yeah.
Yeah, I mean, they're operating within constraints, right? And you only have a certain amount of options within those constraints. Yeah. So, Dave, let's go back to insurance. So I get it. We get you involved when there's a huge catastrophe, right? But what are some things people can do when it comes to negotiating insurance, when it comes to policies and sort of coverage proactively to protect themselves?
I mean, nowadays with AI, you can plug your policy into AI and it won't give you the best answer, but it'll give you a pretty good answer and help you. The kind of insurance 101, I teach a lot of classes about this, is insurance companies write policies so that if it's fine on Monday and damaged on Tuesday, there's probably coverage. Obviously, there's some exclusions when it comes to larger catastrophe events, floods, civil commotions, wars, stuff like that. But what ends up having an issue is that when people let up too much information, my dishwasher leaked, but it might have leaked 2 weeks ago too. I don't really know. And then it leaked again, and then it leaked again. And so that right then and there is it leaked multiple times, so they're probably going to exclude coverage. So what I always tell people is that traditionally for that claim to be covered is it has to be fine on Monday and damaged on Tuesday. And that's kind of like that holistic perspective of insurance and in a small kind of confined box. So people always just say, they give up too much information, but they don't even really know about it. They're just worried, they're anxious, they don't know what's going on, and they just give up too much information. So when I tell these people to file the claims, it's like, hey, I had a flood at my house, there was water on the floor, and that's it. I call the restoration company, they're starting the work, and they're getting through whatever remediation efforts need to be done. But like I said, is I think what I've kind of continuously fixated on is that people give up too much information, whether that's in the first initial call on the claim itself or whether it is during an inspection with the insurance company down the road. But it's like, you don't need to have this mentality to just talk and tell them everything, because they're trained to just sit there and listen and say, okay, what other information is this homeowner going to give me to where I can settle this claim quicker?
Well, that's one practical piece of advice. What about potentially a higher deductible might be another piece, or maybe some sort of coverage that they should ask for that people don't normally
on top of their
umbrella policy. Something a sort of term people should request that they're unaware of. Anything along those lines?
Yeah, I mean, it kind of depends on what the business is, or what the product is. Is it a single family home that the homeowners reside in? Or is it a rental property where you're in the midst of doing a rehab? So let's focus on the kind of the investment perspective where you're doing a rehab on a property. Let's say it's a 16-unit property. Something to be mindful there is when it's in the process of rehab, is it going to be vacant for a certain amount of time? Vacancy is a heavily focused exclusion that comes in place with most insurance policies. What happens is once it's under construction, it's not considered vacant. But if you're waiting on permits, you're waiting to evict the rest of the tenants or move them out because you're doing a rehab of the full property itself, that's something to be mindful of, to have the right policy in place. Because if you have a traditional, landlord policy on this 16-unit property and you only have one tenant in it and there's a fire, you could either be partially denied for the entirety of the claim or entirely denied for the entirety of the claim.
So you're really talking about builder's insurance versus regular insurance, right?
Exactly. Yeah.
Yeah, that's a really great tip, because when I take these large construction projects on, the bank literally requires me to get builder's insurance to your point, because they want coverage in case if something go wrong, they're not going to be shit out of luck with getting their loan repaid, right?
Yeah, exactly.
Okay, so yeah, I mean, that's a really good tip. So what's your recommendation when it comes to umbrella insurance?
Get more than you think you need.
Okay.
Yeah. It depends on, again, how the entities are structured too. I've worked with clients where they have thousands of single family homes. They're all in separate trusts or LLCs, and they've done a cost benefit analysis to where they're lower end, kind of like class C, maybe class B type single family. So they're all 200 grand that are paid up front in cash. In that instance, they have them all separate, and they've actually foregone the consideration of umbrella policies, because what if they really have a significant lawsuit against that property, they just let it go. That's one perspective. But again, it's risk over a large quantity of properties, and they've done a cost benefit analysis to where it made sense to do it that way. If you've got a handful of properties, let's say you've got 10, 15 units spread across 3 or 4 specific properties, couple of multifamilies, etc. In that instance, I mean, you've got to realize that when it comes to injury type claims, the quantifiable exposure there is much more exponential than when it comes to a property damage claim. With, like, case in point, the room I'm in right now, if this were to either burn up or fire, flood out or whatever it is, you're only going to get so much at the end of the day, because it's, how much is drywall, how much is baseboard, how much is paint, how much are light fixtures, etc. Like, there's a quantifiable number to associate with that. When it comes to injury, so that's why you would have like another rider or an umbrella policy. If someone were to fall and break their leg, but this was like some multimillionaire that now they're out of work, and so they have a huge exposure there, it's a much more exponential exposure there, as opposed to you've got property damage where we can kind of quantify and unit cost out the repair themselves.
Yeah, and I mean, I think you bring up a really good point. That's why it's like, as a landlord, like, I don't cut corners when it comes to snow removal. Because I know if I get a slip and fall claim in my property, that could be a lot more expensive than a fire or a flood, right? Because like you said, the worth of a human is debatable, and it can get to exponential scales if it's the right person, or even with the right legal coverage, right?
Yeah. And I mean, just like myself, we work on a contingency basis. A lot of these attorneys, when it comes to slip and falls or personal injury claims, taken on a contingency basis too. So their time is, they're going to dedicate as much time as they can to pursuing that, because the more time or efforts that they put forth in it, they hope to recover a lot more. And that in turn kind of falls on you.
So in the scenario that you have multiple buildings and maybe 10 to 15 units in total, it's better to have higher deductible and then maybe $1 or $2 million umbrella policy on top of that, you're saying?
Yeah, I would say just be mindful about that higher deductible. I mean, from an investment perspective, you guys have access to subcontractors and things like that to do repairs on a cheaper basis. So, if you've got that 12 unit property and you have a small water loss that's 10 or 15 grand, you might be able to get it done for 8. I would tell you all day long, don't file that claim. Just eat it, write it off, and move on.
That actually brings up another point. The more claims you make, the higher your insurance becomes too, right? So it's kind of like a cost benefit, whether you even file it or not, right?
Yeah, exactly. And sometimes it's weird so the insurance companies have this system called ISO. It's like Insurance Service Organization or something like that. It's where all of the claims are communicated amongst all the other insurance companies. So if you have a claim with AAA and then you sell that property and then buy another property and insure it with State Farm, they will see that older claim, and that will in turn either make your insurance more expensive, deductibles higher, etc. So the less claims, the better. Traditionally, those claims fall off between about 3 to 5 years, but I've seen them hold on for a while.
So let me ask you this: going back to the claim, if I file $1 million claim versus a $100,000 claim, will that affect my insurance more in the long term?
Traditionally, yeah, it really will. It kind of depends on what it is, and there's so much more that gets involved in that. Like what we see out here in California is the fire zones and things like that. So you could have a claim and they may not drop you, but they drop you because you're now at a higher fire risk kind of thing. So Yeah, traditionally the kind of way to look at it is that, hey, if I do have a claim, I'm going to probably see a 2x impact on my premiums for the next 3 to 5 years. So that's sort of the perspective that I have people take when it comes to, do I want to file the claim or not? It's much more quantifiable in the single family space than it is in the multifamily and more like portfolio driven type perspectives. But if you've got, if your premiums potentially could 2x for the next 3 years, would that financially make sense to file the claim?
That's a good cost to benefit analysis calculation you could run.
Because it's like, it's again, single families are easier because it's one policy, one property. But if you're paying $3,000 a month for the single, or $3,000 a year for the single family home, and you're gonna have a claim, it's gonna bump up to $6,000 for 3 years. Okay, now we're at what, 18,000, and you've got a $10,000 claim. You don't file that claim.
Does the claim follow the LLC in business, or does it follow the person?
I've seen it follow all of the above. In my case, I had a claim in 2019 for a property I owned, and when we re-upped our insurance on another property in 2024, so 5 years later, it still pulled up. I had sold that property. It was under a trust, completely separate to me, and it still pulled up under my name.
Wow. Okay.
So this is actually a good segue into something for our users. Being in the insurance industry, can you shed a little bit of light on why exactly in recent years insurances have spiked, and what normal folks can do, and investors as well, to try to lower a little bit their insurance costs?
Yeah, absolutely. I think so. Why the answer to the first question is like why the insurance companies we've seen such an increase over the few years is one, because of it, just the inflation that we saw in the COVID years that were 10-15% or whatever it was. A lot of the insurance companies aren't able to increase their rates based on inflation. There's some regulatory shenanigans in state by state that don't allow them to what they call take rate, increase their premium rates across the board. They're very limited on how they can do that. So they're like still catching up to some of those high years of inflation that we've got. The other component is just like with a lot of these more natural disasters, like a lot of the Florida hurricanes, those Gulf Coast hurricanes, the fires in California, these insurance companies are realizing how large their exposures are, and that's becoming an issue there. The second part of your question was like, what can consumers do about it? I always tell, especially when people have portfolios, is to shop those policies yearly. I mean, really, you get a good broker, you're not doing anything, they're doing it. And I would have them shop it. And just be mindful of that you might have to shop your entire portfolio or a couple of properties, or maybe you're moving 3 or 4, and being as cost driven as that is possible, especially if you've got, pretty tight cash flows to where the premium is going to make it or break it of whether the property cash flows or not.
Good points.
The other thing from a investor perspective is raising that deductible. When you have access to subcontractors or great contractors that can do work for 50 cents on the dollar, it doesn't make sense for you to have a $2,500 deductible. It just doesn't make sense, because you're not going to file the claim anyways. You're going to go do it yourself. Hey, look, it flooded out. We've got a little bathroom to redo for $5,000. Just go do it and move on. Let's just get back to like where you as an investor excel, having the property rented at a premium rate. Yep. And continuously making those improvements to add the value to the property, either resell it, refinance it, whatever you want to do.
Yeah, I mean, you bring up a good point. And like, I own hundreds and hundreds and hundreds of units, and I have never filed an insurance claim because like I get everything so cheap. Like, why would I pay $5-10 grand for a deductible when I can literally fix this flood for $5,000?
Yeah. Agreed.
So, all right, just to wrap it up, what is one of the biggest myths people believe about insurance today?
That they're on my side.
I believe that myth.
After this podcast, I clearly got that drill into my head.
Yeah. Well, the whole system is set up for consumers to fail in insurance claims. We had talked about the insurance company's claim organization and how that's a bureaucracy. But then you take it a step further, and this is not to discredit sales agents. I have a sales agent it was a sales agent for many years that works for me. But the way that agents work is like if they go write 100 policies, but all of those 100 policies have a claim, they get a reduced premium or commission on those premiums. So they want to write better risks that have less claims. So they are somewhat financially incentivized for you to have less claims or have less successful claims. So like that whole system in itself from the insurance companies, from the insurance world, is setting the consumer up for failure without advocacy.
One of my favorite quotes by Charlie Munger, and I say this all the time, so you probably heard this before. Show me the incentives, I'll show you the results. Right?
100%.
And what you're essentially telling me is the incentives for everybody is don't file claims or get them as low as possible.
Yeah.
Right. And then if those are the incentives, why would they have your back?
Yeah. Agreed.
Now let's jump in to your journey a little bit more. What are some of the best books you've ever read that have had the most impact on you? You could give like 2 or 3 if you can't pick one.
Yeah. Buy Back Your Time. We talked about that. I mean, the time audit a little bit different, but I think that just the conception of buying back your time, that was a big one. Who Not How was another great book. I forget who the author is of that one, but I think that especially from a scalable perspective, that I think was a very helpful book. And then The 5 Types of Wealth. I really enjoyed that book because I think as you get into your entrepreneurship, your journey, you realize like, well, why am I doing this? You know, I can work 100 hours a week all day long, but is that what I want to do? Or do I want to be able to spend time with my son and my family and go on a vacation here and there, whatever it is? So Buy Back Your Time, Who Not How, and The 5 Types of Wealth.
Love it.
It's funny. All of your tips surround around time management, which I love.
Because my wife and I's core values are health, family, and freedom.
Which people think freedom means financial, but it actually means time.
Absolutely. Yeah. Give us a little glimpse into what your day-to-day looks like. How many hours do you spend on your business versus leisure versus time with family? And how much of autonomy do you have in those?
It's kind of all over the place. I wish I could give you a more direct answer, but I mean, I usually work regular business hours. Unfortunately, in our space, it's a very reactive space sometimes because we never know, like if a fire comes in where we need to allocate a lot more resources, it sometimes takes some effort to get those resources addressed to it. So I try to really stick to business hours. I have we have after hours call lines that rotate and fluctuate around the team, and then I, as a leader, do take those times too. I don't just pawn it all off on my team. So right now, I would say I probably work like 40 to 45 hours a week in the business, but because I'm like a very account relationship driven type person, like that's what I enjoy. I don't find it work when I'm out meeting a potential like client relationship partner for dinner, for lunch, for breakfast or whatever. But those are the times that kind of drive me above that 40-hour kind of work week perspective because I'm off meeting them for dinner, whatever it is. But again, that's not work to me if I'm going to go see a guy that I genuinely enjoy and another entrepreneur that has a business in some, similar synergistic industry. So yeah, I don't know.
That's freedom. How about your biggest mistake that you've done in business or investing and what lessons you took away from that?
I think not investing in myself sooner and finding out like where everybody is so different and finding out where your shortfalls are. And for me, I think it's, from an entrepreneur, it's been ingrained in me for so long. I just assume that everybody is as autonomous as I was, and that's not the case. And I had fallen short in the ability to like effectively communicate with people over the years. And I had lost people that, were great assets to my team. I have had caused frustrations within my organization because I'm just like, hey, make it go away because that's what I know how to do. But I realized that some people may not operate in that manner. And the culture index really taught me that. And I wish that was something that I worked on earlier in my entrepreneurial career.
Got it.
I totally agree. Your level of success is determined by your level of self-development. I am a huge believer in that. And, to your point, like Andrew 4 years ago could not run the organization of Andrew today, right? Yeah. Because like you have to acquire certain personality traits, certain skills to successfully manage, a high caliber team.
Yeah, agreed. And I think I remember when I first started, I ran into another public adjuster And he's like, yeah, I spent 50 grand last year on self-development. I'm like, that's insane. And now I'm like, oh, that makes 100% sense.
Yeah. And then you talk with the guy, you ask how his business is doing. It's probably 3Xing right now.
Yeah, exactly.
Right? So Dave, I just want to thank you for taking the time and teaching our audience all about insurance. I hope we did not put anybody to sleep or people are still awake for this podcast. But, Dave, if people want to learn more about you, if they want to learn, if they have any potential claims they want to file or just kind of want to talk about insurance, where can they find you?
Just my website or social media. It's propertyclaimsconsultant.com. Our social media is Property Claims Consultant, Facebook, Instagram, and Twitter. So we're pretty active on all of those sites as well. And so we'd love to talk, or if people have questions, preemptive questions, claim questions, whatever it is.
And against popular belief, it's more than one person that works at the organization.
Yes. Yes, exactly.
And you're across all 50 states, right? It's not just California?
I work across about 25 or so. I'm actually in the process of trying to figure out kind of like a cohort partnership to where we'll be actually in 50 states amongst 3 different companies. Licensing in each state is a pain. It's a feat for us to get. It's similar to, almost real estate agents. It's tough to get. You have to go through separate training and courses for each state. So right now, pretty much Colorado and West is we're licensed in every state, but working on getting more and more states slowly but surely.
So if somebody calls you that you can't help, you at least refer them to somebody that can.
Yeah, exactly. Absolutely.
Cool.
Awesome. Well, thank you so much. Really appreciate your time.
Thank you, Dave.
Thanks, guys.
Appreciate it. Thank you for joining us at the Freedom Real Estate Podcast. Check us out next week and make sure you subscribe. Take care.
Bye, everybody.